Hello everyone and good morning. Happy New Week, and I wish every single trader out there a blessed and profitable week trading forex. So I want to let you guys know something about the forex market here. Consistency and daily practice is gonna make you succeed. Don't be afraid, make the right choices, and you're gonna win. So first things first, I'll have to be quick about this, yeah. You have to look for support and resistance zones on your monthly chart. Those are areas in the chart that markets love a lot, like they are kind of like attracted to it. So you have to look for those zones in your market. So when you have a good support and resistance zones in your market, those kind of positions in the market gives you higher reward. Unlike the lower time frames that you aim for about 20 to 30 pips or thereabout, these higher time frames give more profit. So without wasting much time, let's get right into it. You know, one thing in forex that your strategy here is good. It helps you most of the time, but also remember that some days you can have losses and be ready to deal with those losses. However, so moving on, identifying the strong support and resistance zones, you have to look at areas in the chart where you have candlesticks that have no wicks. Now, candlesticks that have no wicks, I mean that these are candlesticks in which they don't have, they either buying or selling pressure increased impulsively. It increased impulsively, like at some point the market just moved up quickly without any retracement or anything. So those areas in the market you could call strong support or resistance zones. But you hear things like supply and demand, but for this is my strategy, so I'll recommend you guys go study and learn. But this works, so if you want to learn mine, it's okay. It's also cool. So now one thing you have to understand is that after every bullish candle, if there is an impulsive candle immediately after that candle, that is a support zone. Like this impulsive candle immediately after that bullish candle, and you've seen this candle here has no wick. So that is an impulsive candle, and that's the support zone. And if you look back in history, you see that this was some sort of zone back in 2015. So this guy has respected this zone, showing that this impulsive move to the upside is a support zone. So moving on, if you see the same thing in a bearish sentiment, that you have a bearish candle, then an impulsive move to the downside, that is a resistance zone. So you mark those zones. Now you should also understand that zones that after the resistance they now turn support, those are areas that market can be attracted to potentially, and they come back and go. So yeah, proceeding, moving on. I just want to mark out all the zones in the market in which there was either a bullish candle and an impulsive move, or a bearish candle and an impulsive move. So I've seen one here, a bearish candle and impulsive move. So I marked the impulsive move, a bullish candle, impulsive move. I marked the impulsive move to the upside. So looking back in history, there's nothing over at these zones. So these are fresh zones. Presently, the market is giving us fresh zones here, so we don't know what may happen. Maybe the candlestick may keep going up, or it can go down from here. We just have to find out. So, however, what will you do is, since we have a week here at this top, we'll just mark out this week, and that is that for now. You understand me? That is that for now. Like straight up, let's go down to the weekly chart so that we can see if we have those kind of stops again. After a bullish candle and impulsive move to the upside, you mark that impulsive move is something that has literally kind of like no wick. You understand? It has no wicks. You know you're in the right place. I've seen this guy, though the wick is there, but it's kind of like little. But just know that this is a potential zone that market can eventually come down to. So don't be scared. And this other guy here, impulsive move to the upside. Bullish candle, impulsive move to the upside. Can mark this guy too. These are areas in the market where you could just take like quick profits and stuff. And this is another guy here, a bullish candle, impulsive move to the upside. Little or no retracement, so I'll mark this guy too. So I have three zones in the market. So now I'm looking at the market to come up here. That is one. Also looking at the market to either do something like this. As it breaks out from that zone, it comes in here, then comes down here, and that is two. So I have two potential zones, and these are areas in the market where I want to take my profits right now. You understand? So the next thing, you go down to your daily chart. What do you have on your daily chart? Do you have those kind of candles? Do you still have those kind of candles? If you have those kind of candles, though on the daily chart here, because there's going to be a lot of impulsive moves and stuff like that. So imagine you mark out all these lines on your chart, man. You have so much noise and it's not advisable. So the daily chart is more advisable for your entries. You understand? So now one thing you have to understand is that at zones, like this is a zone and this is another zone and this is another zone. At zones, if your candlestick patterns show you confirmation, you just have to go into the market, follow the market. You have to be bold to make that step. You follow the market and you're in. Hope you guys understand what I mean. So now this is the daily chart. Today is Monday, market just opened. So let's say this bearish candle we are looking at presently now, it closes bullish. Like let's say it closes above this previous candle. Should this bearish candle close above this bullish candle, that means the bearish candle now turns bullish. We have to look for an entry to the upside, place a buy somewhere. If it comes, I'm not saying you should place a buy. I said if it comes, you aim for the upside. So if there's no buys and the candle, the bearish candle, it closes like bearish and it breaks the 0.5 zone of this bullish candle, that means we have to wait, be patient until we see a sell candle to the downside. So that's just it for that strategy. So how do you trade this strategy I'm talking about right now? This is how you trade it. I'll go lower, let's say 4 hours, but 1 hour will be the last place of stop sell. 4 hours. From what I'm seeing here, that okay, there was a lot of bullish, there was a lot of buying pressure here, a lot of buying pressure here to the upside, and over here is our mini zone. I'll call it a mini zone here. However, over here is our mini zone. So from our mini zone, probably the market can push up from here. Market can push up from here to the upside, or it can start from here to the upside. So whatever the case may be, don't be afraid, traders. Be ready to get into the market, into your market. But should any bullish candle come out from this zone twice, is a sign for you to go into the market. So please don't miss that entry. So you heard me say something about should the candle break below 100 of the 0.5% of the bullish candle. This is what I mean. See this bullish candle here. See this bullish candle here. This particular one here. Now you see. Oh, sorry about that. Good. Now you see the bearish candle. This is the bearish candle. Should this bearish candle right now break the 0.5 of this our beautiful bullish candle, this is a 0.5. I hope we're seeing the 0.5. Let me just mark that out so that we could all look at it. Should this bearish candle break our 0.5 zone of the bearish candle, of the bullish candle, we're in for a possible reversal. We're in for a possible reversal in the chart. So you have to be patient, and I won't say pray, but well, to the most part, since we're looking for buys, I mean, we should just pray that from the 0.382, it moves up and gives us a good risk to reward, and we're in. So let's say I got into the trade at this point in time. I got into my trade here. This is the daily chart. This is the daily chart. So I got into my trade somewhere here. Yeah. and my stop loss is just below, a little bit below the 0.5 zone. I'm up for let's say but I don't think I'll be able to hold that much. I'm in for about 106 pips here in the market. So let's just see how it comes out by the end of the day.